Invest UAE 2025 powered by Gulf News, and this panel discussion is on tax. So on your screens in just a bit you would be able to see how the UAE's tax environment attracts global investors. So moving ahead with it and talking a little bit more about it, we have to take a look at UAE's tax policies, including exemptions, low tax rates and incentives for foreign investors. We would learn how these favorable tax conditions are helping businesses thrive and ensuring the UAE remains a top destination for global investors. Good afternoon. I hope that you're doing well. We are joined by, of course, Mr. Nirav Shah, the Director of FAME Advisory over here. All right. Thank you, sir. So let's start off this discourse as well. We have so many questions and I really want to make the max use out of it. As they say, strike when the iron is hot. We have the experts over here, so we're doing that. So to begin with, what are the key factors that global investors must consider when evaluating a country's tax environment, which is very imperative?
So,
late to the party, but not to the question.
Not at all.
Yes.
There are two things that one must look at always, and now that UAE is no longer a no tax country, but it is still a low tax country.
Correct.
Number one, our tax rate is one of the most attractive across the world and across the major financial center. Second thing is you have to look at the overall enabling infrastructure which is already in place, right? So how do you go about doing it? Yes. There are two sides to the coin when it comes to UAE, that if you are compliant, you are enjoying the simplicity, the ease of compliance and all of that. But if you are non-compliant, then the penalties, interest is very high. So we have a deterrent which is built in already. So one needs to be mindful of both the side of the coin and go about it in a very organized manner. And I would just add to what Jason was saying, that out of those 90% SME also, there were large part of the companies which were part of the large multinational groups. They were still very well prepared because they are used to all this. But the biggest challenge that corporate sector here is facing is aligning their accounting policies with the new requirement.
Absolutely. And like you mentioned, I think I would like to be a little cheesy over here and very mindful and very demure, just like you mentioned. Absolutely, we have to have that. Talking about transparency just a while ago and taking that conversation forward on transparency and putting the word challenge, if I might add that word. So in fact, let's make it challenges. So could you share some insights on the challenges regarding transfer pricing regulations and practices? For example, say, what are the best ways to perform its benchmarking and the documentation as well?
Two more
yes,
points
sir.
that I want to add. See, typically we would have preferred that, like other countries in the region like KSA and other, there should have been a basic threshold below which the documentation was not required. But that's unfortunately not the case in UAE. So even a single dirham transaction between related parties need documentation. Secondly, the transfer pricing generally is in context of the international transaction, but UAE has introduced also for domestic transaction because we don't have personal income tax. It's very easy to shift profit from corporate to shareholders.
That's correct.
So that's why they have kept it. But again, internationally, there are no benchmarks available to technically compare, say, management remuneration.
So there's no benchmark for the benchmark?
That's right. So
okay.
what then you have to do is you have to then go on your net margin after charging that, or you have to go on a comparable data and things like that. But these are things which are not typically picked up in any other developed countries because they already have personal taxation. Now here, because of our unique place, we have this also as a challenge.
Interesting. So now I would like to come to the cash flow problems over here, all right? So the question is, how can businesses manage cash flow problems while tackling the corporate tax liabilities? I would love to know your thoughts on this.
So let me start with that.
He's starting with a smile. I see something concrete happening now.
The onus of tax payment is only at the time of filing the return. So it's not really that you have to meet 3 or 4 times a year, you have to keep paying part of it. So one is that you can accumulate that, keep it aside, and pay it at the time of filing return. But if that amount is becoming substantial, then of course after the end of the year you can choose to pay it in 2 or 3 installments before filing the return. But this is something that the plan that finance team will have to put together depending on the quantum that is involved. They are already doing that currently for the VAT part of it, and they are fairly conversant with how to meet those requirements. So I'm sure it's not going to be that much of a burden, because VAT you pay monthly or quarterly. Here you're only paying yearly, right? But yes, VAT is not a cost to you. This is definitely a cost to you. So this is where you need to be more careful.
All right, got that. Hence, you started with a smile when you explained all of this. So now moving on, how to understand and comply with the double taxation avoidance agreements. Now that's a tough one that I wanted to kind of get to learn. Yes.
So I'll start with that, then I'll pass it on to Alok and others. UAE is very interesting. Even when it did not have taxes, it has already signed over 140 treaties, of which 105 are operational. Okay. Now, increasingly with the lot of activity by OECD and all, the treaty reading and the impact has to be limited, but definitely it reduces your withholding taxes in different jurisdictions. In UAE corporate tax, we are fortunate that we have ability to claim foreign tax credit even when the treaty is not signed. So even if UAE not signed treaty with a country, say USA, and you get some income from there and there's a withholding already deducted, you can still claim the foreign tax credit of that against the UAE tax. Of course, only up to the UAE tax level. And therefore, treaty does two things. One is that it tries to allocate the taxing rights and therefore avoid the double taxation, or it allows you to give you that mechanism to claim the credit. So UAE has already voluntarily done the second part. So whether you have taxing right, you don't have, I'm going to give you credit, so don't worry. I'm not going to tax you twice. So that's the thought process.
Interesting. So I guess we'll jumping towards the second last question, and we should be wrapping up this discussion as well. So how do you foresee, so we're going to talk a bit about vision here, because when we started off, we talked about the future, and I mentioned something that the best way to see the future is to create it, right? So the question is, how do you foresee UAE's tax environment evolving in the next 5 to 10 years, let's say? Sir.
If you really want to start looking at future, we have currently also digitized compliance. The FTA, the way they are investing into technology, we are going to have all connected compliance. What do I mean by that? Your VAT return will have to tally with your CT data. If not, they will say, okay, this is not chain. So this is where we are going. It will be all connected. We have e-invoicing coming in next year. So your data or all entire invoicing has to be going through the FTA system, right? So they are going to use technology much more than what we are anticipating. And this is what business will need to be ready with in next few years' time, right? They are not prone to doing too many audits, but now they'll go other way around. They'll start analyzing the data, and where you're making mistake, they'll come and do the audit. So this is exactly what somebody needs to start thinking, that though UAE is late in implementing taxes, but when it would come to administering, they'll go way faster than a lot of established countries who have taxes for 40-50 years, because we don't have manpower. So we'll use technology, and that will be the game changer.
Absolutely, there's no denying that. I think that everyone's taking notes right here. You heard it first through Gulf News on Invest UAE 2025. Bring out the cameras on Instagram right now. I started off the event by talking about this, and whatever the world does, UAE does it better. So there's absolutely no denying that. So with that said and done, ladies and gentlemen, so because today's panel discussion was on tax, and specifically how the UAE's tax environment attracts global investors. In a nutshell, in a one-liner, what would be your takeaway from this entire theme, starting one by one with the audience watching live on the social media and the one who's present right now?
I would say simply prepare well. Devil is in the detail, and ensure that you comply correctly. Otherwise, the deterrents are already in place.
Absolutely.